All right, everybody, welcome. Doug McKay, antiwallstreetguy.com on Friday night, the 8th of June, 2012. And good week in the markets. We're looking at a daily chart of the S&P 500 closed basically at the highs for the day. A little bit different than last week where we finished here. Good day on Wednesday. Why? Not only price, one of the biggest days of the year inside the biggest week of 2012. But also an increase in volume on Wednesday. However, today, even though we finished near the highs of the day, or the S&P did, it was one of the lower volume days of the year, with the only other volume days being lower, which were either on prior to a holiday or just after a holiday. So for the bulls, we did comfortably close this week above the 200-day moving average. So for now, that looks like that is held. We just got back above the 20-day moving average, but we are still below the 50-day moving average, the 30-day moving average. And we have yet to clear this area of supply here. So for the record, we have the overall trend again this week as neutral. Now for our purposes, neutral means looking at individual stocks and ETFs that are above the 50-day, that are above the 20-day, that are above the 30-day. That are either coming out of bases, and we'll look at some of those, or they look like they could begin to start to trade out of the bases. So we're not all out, but we're not all in. What I want to talk about before we pull up those symbols is the potential here for a bullish inverted head and shoulders pattern. We did this on a still chart yesterday. This would be the left shoulder here. This would be the head here, and then the possibility of building out a right shoulder here, and then eventually getting through the neckline. That neckline is roughly, give or take a couple points, around 1332. If we get through this neckline, the odds increase that we are going to take a run at the 50-day, probably see some selling there, and maybe get all the way up to 1380. If this starts to play out next week with the incredible amount of news globally, we'll get on it, and our subscribers will know if there's a change in trend. But as it stands right now, again, the overall trend, the way we see it, is neutral, below the 50-day, below the 30-day, again, for the bulls above the 20 and the 200-day. Would have been a little bit brighter in terms of a change in trend with confirmation that the trend is long again if we would have had some type of volume today. And it would also be nice if we got above the high that was put in yesterday, this particular candle here. All right. So having said that, again, let's focus on moving averages, and then more importantly, probably the pattern recognition here, which would be the potential for an inverted head and shoulders bullish pattern. This could all break apart. We could close through these lows here, which essentially would put a fork in the inverted head and shoulders pattern. And then that would mean at some point we're probably going back down to 1250. All right, so let's do this. Let's take a look at some individual stocks that are coming out of basis. By the way, you guys can always email me any symbols or just call me directly. My number is on the blog there. This is a nice chart here. We bought some of this today. Verizon this morning before it closed near the highs of the day. Why do we buy this? Well, number one, it's held up very well. I think we looked at this last week, right? Above the 50-day moving average. It's held up very well. And it has closed above this area of resistance here, kind of out of a mini cup and handle. Not all that excited about the volume today, but the volume certainly was higher than the broad market volume. Let's take a look at Under Armour. This is a chart that we put up last week, and we said we're going to use our stop at 95, which means we would have been stopped out on a close. But as always, you want to have a short memory whether you have a winner or a loser. In this case, we experienced whipsaw. This chart looks good. This is a buy again. And on a day where volume was considerably low in the broad market, this had an increase in volume and price. That's exactly what you want to see above the 50-day moving average. What we also want to look at is where would we put a stop. We always want to eye the 50-day. We always want to eye support right under that. So we're within our risk parameter. Again, the stop would probably be right around 96 this time, moving it up from 95. Let's take a look at Disney. This is something that we're going to look at next week again. Not quite a breakout yesterday. As we know, the market gave back the gains. Disney did finish in the black yesterday, but again, it's above our buy point. It's holding the trend line. It's above the 50-day moving average, and it's not too far extended and decent volume today. Let's take a look at Home Depot. This is potentially building a cup and handle. This is a pretty deep drop here. But in any event, what we'd like to see, very similar to the S&P 500, is for this to fade next week or the week after, maybe build more of a solid base to the right shoulder, and then eventually break through these highs. But this is one to keep an eye on. There's also nothing wrong with putting a half of a position on, for two reasons. Number one, if you think it's overbought. Number two, if you miss it and it continues to run, at least you're half in. Unfortunately, this is something we did not take. I didn't think that utilities would run away as quickly as they did. But for illustrative purposes, or if you guys took this trade, let's put up this chart today. Again, holding the 50-day moving average, right, the blue line, holding the trend line, breaking out of a basing pattern. You're only going to hit resistance, the ceiling, so many times, and you're going to bust through it. So very nice chart there on something that is typically a low beta ETF. Let's take a look at the transports, IYT. This is not a good looking chart. In this, along with the fact that there was no volume, along with the fact that we're below the 50 and the 30-day moving average, and we have yet to exceed the neckline on the S&P 500, which is around that 1332, 1335 level. The transports are not breaking out by any stretch. And, you know, everything's going to bounce for the most part, right? If you stretch the rubber band far enough down, it's going to snap back. But again, as good a day as the transports had, they're lagging. As a matter of fact, this might possibly be a short under 92. Let's take a look at the financials, as long as we're on the kind of the Dow theory here. The financials, ticker symbol XLF. Again, bounced off the bottom. Like we said last week, if we just had to pick one indicator and you wanted to keep it very simple, it would be the 50-day moving average. Once it breaks it, you get out. Once you're above it, you're in. This, again, is a very similar pattern where we'd want to get above to increase the odds that it's going to run up to resistance and test the 50-day moving average, is we'd want to be able to get through this neckline here. All right, so again, you have another potential inverted head and shoulders where you have the left shoulder here, the head here, and potentially the building out of the right shoulder, and then a break above the neckline of around that 14 and a quarter. All right, you guys, that's pretty much it. So the overall trend, I think this is the fifth or sixth week in a row. Let's just say since the 4th of May. And light volume today, but again, above the 20-day moving average, well above the 200-day moving average. We still have the overall trend as neutral, not short, but neutral. That means we're selecting individual stocks and ETFs that look technically sound, and then hopefully with volume to boot. This could all change next week for the better or for the worse. We'll let you know. Pretty interesting couple weeks coming up. And you know what, we'll close it out with gold. Gold is in a downtrend. This is a still chart we put up yesterday. Did fill the gap, but until we get above this area of resistance here, I think gold still has the potential to take out these lows. And if it takes out these lows, then we're going to look at that area we looked at a couple weeks ago, which was the eventual target right here at 138. However, if it gets above the highs of this week, very similar to the S&P 500 and the other indices, then I think we got a shot of going higher if we get above this, and we'll also be above the 50-day moving average. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. Enjoy your weekend. We'll see you next week.